Yeah, happy evening to all of you. On behalf of SIRC of ICAI, I welcome you all for today's CPE meeting on GST perspective on statutory bank branch audit. We have with us renowned GST faculty CA Ganesh Prabhu Balakumar sir, who will take us through today's session. Vanakkam and welcome, sir. It's my privilege to introduce sir. CA Ganesh Prabhu Balakumar is a Chennai-based chartered accountant in practice. Presently, he is a partner in CRBS and Associates LLB Chartered Accountants, Chennai, Tamil Nadu. As a partner specializing in GST and indirect taxes for more than a decade and heading the compliance, advisory and litigation practice. As a counsel, has represented clients in various cases before Customs, Excise, Service Tax Appellate Tribunal, Sales Tax Appellate Tribunal, commissioners and other adjudicating authorities of GST, Customs and indirect taxes. He was involved in GST implementation of various organizations and advised clients across verticals such as manufacturing, construction, entertainment, real estate, retail trade, automobile, educational institutions, charitable and religious institutions, hospitality industry, EPC contracts, information technology, business consulting, etc. As a resource person in GST and indirect taxes, and as a faculty member, has extensively toured to several parts of South India to give guest lectures to members, financial professionals, and students in goods and services tax during the days prior to implementation of GST. Being the master trainer of GST affiliated by the Institute of Chartered Accountants of India, he had made more than 350 presentations and trained more than 10,000 professional and 25,000 students and other members in GST at various seminars, meetings, workshops, and conferences. Yeah, big round of applause for that. He has also presented papers in GST and indirect taxation on various branches of Institute of Chartered Accountants of India in various business organizations such as CII, FICCI, MMA, KMA, and other Chamber of Commerce. Apart from professional organizations such as All India Federation of Tax Practitioners, Bombay Chartered Accountants Society, and various chartered accountant forums such as CA Study Circle, Society of Auditors, Association of Chartered Accountants, Chennai, International Chamber of GST Professionals, etc. He is a resource person in ICT Academy, an initiative of Government of India and other states. Also a most sought of trainer in various government training organizations such as National Academy of Customs, Indirect Taxes and Narcotics, CGST Department, SGST Department, Regional Training Institute, Commercial Tax Staff Training Institute, Tamil Nadu, which train government officers. As a member of GST study group of ICAI, contributed in development of background material on GST law, handbook on annual return, and technical guide on GST audit developed by GST and Indirect Tax Committee of ICAI. He is a member of a governing council and currently he is the president of the International Chamber of GST Professionals, an association dedicated exclusively on GST and indirect tax. He regularly writes articles in reputed financial dailies and magazines and participated in various shows and debates in television. During his student days, he has won first place in All India 5th quiz competition for ICAI students conducted by ICAI. With this brief, I present before you Ganesh Prabhu Balakumar sir, who will take us through GST perspective on statutory bank branch audit. Over to you, sir.
Thank you, Rahman, for I'm not very sure, do I deserve so much or not? You have made me to rethink about all the credentials that have been achieved over the time. Thank you. It's always a very good experience to be part of various initiatives of SIRC of ICAI, and this time being the season for bank audits. A unique model has been identified as what from a bank branch audit perspective that need to be considered in the GST. Before me getting into the topic in a more precise way in connection with all the regular aspects, I just want to highlight certain aspects in connection with bank branch audit. Already, it is going to be on a very tight schedule where maybe 4 days, maybe 7 days. People will be behind us in connection with ensuring the bank branch audit is completed on a very watertight schedule. When that so be the case in connection with on the completion aspects, no, on the aspects in connection with on various other compliances in something to do with LFAR, something to do with tax audit, there are going to be all those other requirements in connection with GST, in connection with other laws. Apart from all that, as being a statutory auditor, and one of the important aspects of the bank branch audit is to ensure all those other statutory compliances, statutory requirements, and in case of there is a general advisory which comes out and says any deficiency is being identified that need to be escalated by the respective branch bank branch auditor. So it becomes important that the compliances under GST are how well complied by the respective bank branch in case of whatever that are going to be audited by us. Given a background in connection with all these aspects, my presentation will be more on into what are the prominent areas that need to be verified by a statutory bank branch auditor. Honestly, let me put it in a very simple way. Among all the other activities that are going to be verified by a statutory bank branch auditor, this will also be one among the activity. I would not say this is the only activity of a statutory bank branch auditor. One of the activity could be ensuring the compliances under GST is fairly complied with. In that note, where all along we used to do audit, all this was not pressed. Why under a GST environment we are pressing it more? There is a small background behind all this discussion. A lot of us are already aware in connection with this discussion, because under a pre-GST regime, there used to be a model of centralized registration, and the entire banking industry, preferably almost all bank, has opted on the centralized registration and discharging their service tax to the central government through the centralized registration. Now, post implementation of GST, the first hit all the banks had was they have to decentralize their offices. Now, at a state level, be it a head office of the respective state or zonal office, as the case may be, every bank has its own modality in identifying the branch head. Based on that, at a state level, there is going to be a registration. Now, every activity of a bank is brought into the tax net. Not even a single transaction is going to be out from the tax net. Whatever be the transaction that are done by bank, is everything is leviable to GST, or everything at least brought onto the scanner of GST. Some of them gets exempted, majority of them gets taxed. Be that as it may, these are all going to be the broader aspects, are the basic compliances which need to be complied are done by the respective bank branch that has been audited by us. On that note, when every industry, often it is called or comes up with its own technicalities, its own specialized aspects, where we will always have two views in few areas of certain industries. When it comes to bank has its own unique model. Some of the modalities, the method in which it is getting funded, there is something called as a fund-based advance, there is something called as non-fund-based advance, there is a hire purchase standard transaction, there is a lease transaction. There are different types of transactions that are executed by a bank. And very interesting to note, almost all activities which are all executed by the bank is going to be brought into the scanner of GST. when we get into our discussions, we would go and identify a few areas alone are out from the tax net. But for it, I am of a view almost all transactions are brought into the tax net. It's only one of its important transactions is kept out from the tax net. Given a situation like this, 2-3 reasons are also required here. The number of transactions, the number of customers at a bank branch level they handle, and the volume of transactions that are associated are huge. So naturally, there is a system. The system takes care of many of the aspects today that we are going to discuss. Our responsibility will just simply stop when we go verify the transaction at a system level that yes, the respective transaction is getting taxed, which means the company would have, which means the respective bank branch would have discharged its tax liability associated over here. Having said, these are all little complex volume from a banking perspective. No doubt, every time the bank branch audit always have various other challenges. We should also test it from the GST compliance perspective. To start with, on the registration note, I'm sure all of us will agree that any person who is engaged in a taxable, any person who is engaged in a supply which crosses a basic threshold, he has to get himself mandatorily registered, except a few, irrespective of the threshold, who has to get themselves registered. When it comes to the banking industry, it is a predominant practice in almost majority of the banks, including private, public, whatever be the bank modes that are all in operation, that at a state level, one of the office is getting the registration. Let's say in case of Karnataka, there is a headquartered branch at Bangalore. The Bangalore branch will get registered. Let's say at Tamil Nadu level, one of the headquarter branch of SBI is at Chennai. Based on that Chennai branch, the registration is sought in Tamil Nadu. So on and so forth in the case of respective state. So at a state level, yes, no doubt, there is a registration that has been there. And under that registration, almost all branches within the state are getting connected. So very interesting point over here is all the other states, so all the other branches in that state get connected to only that respective registration. Exceptionally, a few private banks alone for certain strategic purposes within a state also has 1 or 2 registration. Maybe as part of the master file, as part of our understanding, as part of the requirements of pre-filling the tax audit report, we may inquire with the respective bank branch manager, requesting him to share us a copy of the GST registration certificate, and along with the additional place of business where we can plot down that particular branch is getting tagged with this particular GST registration. As a matter of references, let me repeat, but for it, I don't foresee anything that is there as important associated over there. Now, why? Because there are possibilities. More precisely, after an amendment that has been made in the registration provision, within the same state, I may have 2 different registrations for a same bank, which is allowed, which was originally not allowed, unless and otherwise if I'm not going to have a different vertical. In case if I'm going to have a different vertical of business, then yes, it was allowed. However, after 1st February 2019, there is a proposed amendment which came out and told that irrespective of your business being same, you no need to bother. Irrespective of your business being same, you are allowed to operate based on if your place of differences. if your place is going to be different. For example, one of the private bank for Coimbatore, Tirunelveli, Trichy, all that belt together and all the branches belt together has a separate GST registration. Similarly, in Chennai, they have one more GST registration. In other words, in Tamil Nadu, they have two GST registrations. So is it advisable? No doubt. It is not advisable. Within one registration, to the extent possible, it has to be consolidated. But that organization has it for a different strategic purpose. Let's not question that. So the very purpose over here is definitely every bank would have been registered, and how their registration set up under GST, and the branch that we are going to do as an auditor, that we are going to do, where it is being tagged, that need to be verified. Followed by, I'm sure all of us would agree that when we peruse the profit and loss account of the bank branch, definitely we will land one of the prominent income to a bank is interest income. And very interesting to note, the said interest income is exempted by notification. In other words, any income earned on interest, deposits, loans, or advances, all those interest income earned by way of extending deposit, loans, or advances, then those interest income will be exempted from levy of GST. Very interesting to note that interest income on loan, deposits, or advances. With a small caveat, the exemption gets concluded. Other than interest involved in a credit card services. So in credit card also the same concept of advancing the person, allowing a person to use the credit facility, all are there. But the law is very categorically defined that interest income on advance, loan, deposits alone are going to be exempted from levy of GST. But for that, all the other income will be brought into the tax net. Exceptionally, one or two exemptions that we have, we may read through it when we get into the relevant point of time. But however, one of the prominent interest income is going to be interest income, and this said interest income will be out from the tax net. Moving forward, in case of all those income which are other than interest income to a bank branch, could be commission, brokerage, or for providing any agency services, or various other charges that are collected by the bank. Could be godown verification charges, could be various other charges which are charged to the account holder or advance holders, or it could be account maintenance charges, debit card, credit card charges, phone banking charges, internet banking charges, or all those digital payment collection charges, or charges that are levied as penalty for a check bounce, or it is going to be charges that are collected at the time of issuing DD, or it is going to be all those charges which are collected as a penalty for not maintaining the minimum balance which is agreed upon. Now, let me put it in this way. Almost all these charges are leviable to GST. Prima facie, almost all the branch charges, loan processing charges, whatever be it. In case of a bank guarantee, the commission, guarantee commission charges, whatever. All these are all leviable to GST. Only one number will be out from tax net, which will be the interest income. But for interest income, rest all are going to be taxed under GST. Now, if that be the case, what would be not covered by a bank branch? A few entries we have, maybe we can press upon these transactions are all not covered, though it is an income, but it would not be a taxable supply. It would be treated as an exempted supply. Very interesting to note, interest income is an exempted supply. Interest on credit card is going to be a taxable supply. Commission income is a taxable supply. Debit card, credit card charges is a taxable supply. So things like this gains its momentum. In case of digital payment, we have a specific entry which says whenever an acquiring bank settles an amount up to 2,000 rupees for a single transaction, either for a debit card, credit card, or any prepaid card payment services, then the said charge, for the said settlement, they'll collect one charge. That on the charges, they are exempted from payment of GST. So coming back here, but for interest income, the bank branch will have very small exemptions which they are entitled to claim, that too on certain specific branches. In other words, not every branch is going to deal with buying and selling of forex. I'm not saying not all banks does. That my question here is a little different. Not every bank branch will deal in buying and selling of forex. In case of buying and selling of forex, we need to appreciate a fact that the currency will be first sourced from a foreign exchange dealer by the bank. Later, the bank handovers the currency back to the respective registered person or the account holder. Now, in this background, in case of all those organizations who are registered with RBI as foreign exchange dealer, if they sell foreign currency to bank, or bank does any sort of transaction in connection with buying or selling foreign currency with this foreign currency foreign exchange dealer bank, then those transactions are exempted from levy of GST. Inter se purchase or sale of foreign currency between a bank and an authorized dealer, or between an authorized dealer and bank in connection with foreign exchange currencies, the said transaction gets exempted. Why I want to press upon all this is, from an exemption perspective, it's very rare. As I already mentioned to you, if a bank goes and buy from a foreign exchange dealer $50,000, for the $50,000, there exists a commission, no doubt. It doesn't mean it does not come for commission. On that $50,000, there is a commission. On that commission, GST will not be applicable, because the transaction is between foreign exchange dealer who is registered under Reserve Bank of India vis-a-vis a bank. The bank sources that foreign exchange and then in turn gives it to its customer, collects some money as charges. On that charges, they are liable to pay GST. But any transaction inter se between being on purchase or sale of foreign currency between bank and foreign exchange dealer, it is out from your tax net. Similarly, yet another important exemption is all those digital payment facility of a single transaction up to rupees 2,000. Now, digital payments or the order of the day, there are 21 lakh crore unique QR user IDs. Many things. The number of transactions per day happens as 9 billion. The numbers that they come up with, digital payments is mind-boggling. Now, when we get into this particular industry, one of the services provided by the bank is all those services provided by an acquiring bank to a person in relation to settlement of a money up to rupees 2,000. So in other words, to settle up to rupees 1,000 for whatever merchant's base payment or whatever as the case may be, only those specified transactions are out from TaxNet. Rest all transactions, whatever we know, will be continue to be taxed. Services provided by Reserve Bank of India are originally exempted from levy of GST up to a particular date. After that, it became taxable. All those services which are provided by bank to government, directly to government, or to any of these schemes specifically identified by government. Let me repeat, one among that scheme is all those services provided by way of collection of contribution under a particular yojana. So to a particular yojana, if bank is being appointed as a collection agent, then the bank would get specifically exempted under GST. However, the said exemption cannot be generalized. So if in case the respective person want to enjoy the exemption, then naturally he has to be little exclusive to the respective state government, and he should ensure the compliances are being adequately taken care. All those services that are provided under the pension scheme to various state governments. Again, here and all, they get a small agency commission or things like this. All this are going to get exempted from levy of GST. Similarly, wherever the premium is paid by central government or state government or union territory or local authority. More precisely, central government, state government, union territory. Wherever premium is paid, and in case if any services are provided by the respective bank, then it will get exempted. If we carefully note, these are some of the exemption which directly relates to services provided by bank. But for interest income, buying and selling of foreign exchange dealer, any digital payments which is up to 2,000 rupees are going to be exempted. Charges on those up to 2,000 rupees are going to be exempted, but for which we don't have very great exemptions, because the rest all exemptions are all little tiny and applicable only to the respective transaction. But when it comes to a transaction like place of supply, do agree the respective person is leviable to pay GST. But how are we going to determine the place of supply? Will it be an interstate supply or intrastate supply? Today, this challenge that we are discussing is fading it down in a very detailed way. As of now, that we could able to see, many banks started neglecting DDs issued issued to a person other than bank bank account holder, that respective bank account holder. Now, why should I take up a DD of a different bank holder who comes all the way, make cash payments, and that's coming down. It's coming down. Now, we have certain restrictions. I'm given to understanding up to 20,000 rupees. We can go give cash over the counter and take a DD or a banker's check from the respective bank. Beyond that, it is not possible. That is what they informed me. Now, indirectly, to gain control of it, otherwise, it has also been happening. Now, given an environment like this, how place of supply is determined in case of banking industry? In case of banking industry, the location of recipient, where the location of the recipient is located, that would become place of supply. Every bank which has NRO, NRE account holder will become happy now. Location of recipient is going to be place of supply. Good, I'm happy. Correct. Location of recipient is place of supply, no doubt. But if location of recipient is not available, then location of supplier will become place of supply. In other words, there was a DD which need to be taken for the purpose of an exam, for examination purposes. An individual walks into a bank, takes a DD for 4,000 rupees, 4,500 rupees, as the case may be. Take a DD in that connection. And having taken that DD, they in turn hand over to the respective person who has deposited money into the bank account. A charge is being collected from him, say 30 rupees, 50 rupees, whatever be that number. A very important question gets raised here. For this 30 rupees, GST is payable. That is also sandwiched, and that is how the charge got collected. Now, the most important question for us is, for this 30 rupees of money which I receive, do I need to pay CGST, SGST as intra-state supply, or I should pay interstate supply? No. When we go back and see, we have in the challan only the respective individual's name. He has failed to mark the address of the recipient. So, in exceptional transactions, in case if the bank is accepting a particular transaction as a supply, but they are unable to conclude that it is an intra-state supply or interstate supply, that is, in case if they are failing to understand the nature of supply, then the law creates a deeming fiction here. In case of banking and financial services, location of recipient is not available, then location of supplier will become place of supply. So location of supplier will become place of supply means location of supplier is already located in, say, Andhra Pradesh, Telangana, Tamil Nadu, Karnataka, some place. That place, the bank place itself become place of supply. So location of supplier, place of supply, same state. So intra-state supply will come. So my core intention point here is, in case of banking and financial services, where is the recipient located? Usually, generally, where is the recipient located? That would become place of supply. If location of recipient details is not available, location of supplier place will become place of supply, and that is how it will be determined, both in case of domestic account or international. Only difference is in case of NRO, NRE account holder alone, NRO, NRE account holder alone, section 13, subsection 8, more precisely. In case of NRO, NRE account holder alone, it is being defined that the location of supplier shall be the place of supply. So in other words, we cannot be little more comfortable. Why? Because usually location of recipient, usually location of recipient will be available to the bank because of the strict KYC requirement. So as per records, it will be available. It may be available. For some reason, if the organization has taken a chance that we will not intimate the details of location of recipient or details of location of recipient not available, then it would be decided accordingly. Having discussed on one end the income part of the organization, where we have touched upon the major income streams that would be landing up to the balance sheet, that would be landing up to the P&L, and those income streams need to be tested whether an 18% GST is discharged. Now, can I go and verify it at the return level? In my view, forget at a bank branch audit. I don't foresee that would be possible at all. Now, all that you can satisfy yourself is if you go back to the respective code number which is given for commission, let's say commission collection account of all those commission charges that are all there, which are all collected. Now, at the best, you can go and see on those commission whether the respective GST is charged. Maybe that's all. I don't expect somebody to go and verify it beyond that level. Our intention is very clear. Have they complied with the provisions under the GST? Because that becomes one of the requirement of which also need to be intimated to the statutory bank branch, but which also need to be intimated to the head of to the zonal auditor or the head auditor that this branch has complied or this branch has not complied, as the case may be. Coming back here, services on which on all those services which are provided by the bank, there is a possibility of being taxed under reverse charge. Let me repeat it. There is a possibility that very few bank branches would be discharging their reverse charge liability. Or very few, in my view. Predominant of them may be overlooking it, or maybe would not be in the domain to pay all these liabilities. In this background, in case if a person has provided any services and on that said services, so in case a bank branch has received certain services, on said services, bank as a recipient is liable to pay tax under reverse charge. When we go back and test that situation, in case of all those services provided by central government, state government, yes, no doubt, the said activity would tantamount to a supply which is taxable under reverse charge. In the expenses, if they have marked something to do with director services or any payments that are made to director, then RCM would be applicable. It's very rare a bank branch import services from foreign country. There are situations we have come across at a head office level, yes, import of services possible. But at a branch level, it is little rare. But in case if somebody has imported any goods or services, then to such extent, it would be, RCM would be applicable. All those services provided by a recovery agent to a banking company or NBFC, then on the recovery agent payments under RCM, the bank is like on the money, the recipient is liable to pay tax under reverse charge. The bank, being the recipient, is liable to pay tax as a recovery agent. So any payment made to recovery agent, any payment made to this DSA, direct selling agent, or any payment made to business correspondent, business facilitator, those are all prominent reverse charges only applicable on banking industry. See, maybe director of a firm, maybe advocate payment, or it is TDS on purchases. Some of these might be not applicable to everyone. A few entries, some of us can take a direct connectivity in that when we scrutinize the expenses in the P&L account, maybe we can press upon the applicability of reverse charge and the compliance of such reverse charges. The applicability of reverse charge, as we discussed, if Mr. A is providing some recovery agent services to a particular bank, then the respective bank is liable to pay tax under reverse charge. And let me repeat it, at a bank level, bank branch level, it is very rare. They will often deploy security personnel from other companies or corporates only. If the person who is securing the ATM which is outside, securing the building which is there, in case of all those security services provided by a third party to bank, no doubt bank being a registered person, also being a body corporate, they are liable to pay tax under reverse charge. So in fact, our recommendation would be organizations, preferably banking organizations, should revisit their expenditure list once again. So in case of sponsorship services, they go and sponsor an event, and the sponsoree who receives the sponsorship fee allows the sponsorer to exploit the event in the way he wants. Now, in case a bank has sponsored certain events, let me repeat, very tough. Unless and otherwise, we know certain events will be sponsored by certain banks. But for it, when we read through the P&L, when we come across a particular expense which says business promotion, or which discuss about all those sponsorship fee, whatever be it, that would be a trigger in connection with, followed by, in case of any payment that are made by a bank branch to an advocate. There are 2-3 different practices that are followed when it comes to payment made to advocate. Practice 1, whatever payment made by the bank to the advocate would be reported as an expenditure. Whatever money recovered from the other party would be considered as an income. This is one way of looking at it. There is another way of looking at it, where all those services which are liable for tax and reverse charge are paid by the registered person. Then on some of these legal services under RCM, the respective bank branch is liable to pay tax. Now, why we have to press upon all this is many times people who are at bank branch may not be aware of the nitty-gritties of the GST law. They may be very good in banking. I am not questioning their banking skills or questioning their ability. I'm just only highlighting that there is a possibility that they are not aware of. A classic example could be very recently, about 5 months before, we have an amendment in connection with, in case if a person is going to report, or a person who is going to report to the respective organization, he gives various advocate services to the respective bank. But when we carefully note, he is among the bank respective advocate panel, and he gets paid for all the valuation that he does, all that and all. But when we carefully note, it will be a debit to the respective account holder. From the account holder, payment will be done to the respective advocate. It will not pass through the bank books at all. The advocate will also have a bank account in that particular branch or bank, and the person who is going to pay also will have the SB account or current account in the same bank branch. Money will get transferred. Here, it is that respective organization paying fees to an advocate. Naturally, to that respective organization, RCM is applicable. We cannot stress upon that RCM under bank, which has already been taken care. Two important grounds. One, all those services that are provided by a business facilitator. A business facilitator is a person who goes and disseminate knowledge about banking and ensure people are aware of banking facility. And these particular business facilitators, RCM would be applicable. Same in the case of security services, same in the case of renting of motor vehicle or renting of a residential dwelling unit. Three rentings: security services, renting of motor vehicle, renting of a residential dwelling unit. In these entries, RCM would be applicable to an organization. So our responsibility would be something like this. We would take up the P&L account of the bank branch and then verify whether any of these expenses are there. If that expenses are there, our next aspect will be verifying in the books of accounts necessary liability entries are passed. Out in inward supplies on which tax payable under reverse charge, those liability entries are passed. If liability entry is not passed, by the time they have taken the printout of financial statement, then naturally it would lead to preparation of a MOC and various other reports that are required, because on account of change in all these numbers. Followed by a small timeline chart in case of time of supply of services. Nothing great about this discussion. Yet another procedural compliance which need to be done by a banking branch, where before we get into the topic of time of supply and discussing on the various timelines associated with it, let me initially first clarify to you. There are a few exceptions that are there available for a bank. Which exceptions are available only to a bank And but for a banking company, but for a NBFC, nobody can enjoy this benefit. What is so special? Banks are excluded from issuing invoices. No doubt, everybody issues invoice, but banks are given a permission that within a period of, after completing the service, within a period of maximum 45 days. As maximum as within 45 days, the invoice need to be raised. When section 31 read along with rule 46 very in a detailed way, deliberate about various requirements which need to be complied with as part of invoices. Very interesting to note, bank can have their own method of invoicing. Bank invoices need not be sequentially numbered. Bank can even say, look, my bank statement contains my name of the bank, bank branch, address, various location, including the purpose of debits are all there. So can a bank statement be considered as a document based on which credit can be complied with? The answer is going to be yes. So having said that, these are all some compliance requirement, maybe whether a test check can be done after processing the loan within a period of 45 days, whether the processing charges is collected. After accepting the proposal and the sanction note has been granted, whether within the next 45 days on the sanctioned fee, where it was told in the sanction note itself, 2% will be processing fee, a tax invoice for which is raised within 45 days. Mark my word, it is automated. Almost all organizations are by and large ensuring that those payments are being, those compliance requirements are being taken care. But my intention here is only one thing. In case of time of supply, organizations are left with time of supply of 45 days. And in case if it is going to be a reverse charge liability, the reverse charge liability after receipt of invoice within 60 days payment need to be made. So I will get an invoice under reverse charge, maybe from the transporter, I'll get an invoice for transportation. Under reverse charge, I have to pay for getting all those goods. Maybe I can pay him for bringing all the goods, but again, for bringing all the goods, payment need to be done. So all this payment, if it is done within 60 days, then that would become the day on which time of supply will trigger. So as simple as that, when they pay, they are liable to pay tax under RC. Beyond that, nothing. In case of RCA, which will be little rare from a bank branch level. But again, whatever we have discussed, 7 or 8, 4 banking related entries, you have to verify. 4 others: advocate, renting of motor vehicle, followed by advocate, renting of motor vehicle, renting of a residential dwelling unit. These are all the prominent entries that are covered as part of this discussion. Moving forward from the time limit and the relaxation that is given by government in connection with issuing a single invoice if the tax value is less than 200, if the value of supply is less than 200 rupees, or you no need to issue a prescribed modeled identified invoice, as long as the contents that are there whatever contents we have pressed upon in Rule 46, those contents that are there, it would be considered as a tax invoice, and a consolidated tax invoice may be prepared and presented to the respective person. To ensuring that these are all some of the benefits that are all enjoyed by the bank in terms of small benefits. I don't need to follow certain numbering, or I can do it. Getting into a next question on valuation. A few points comes up over here in valuation. More precisely, there is a small, I would say that a loan is given to a person with a condition that he shall repay the loan within a span of 5 years. Normally and usually, everybody will ensure the respective loan is paid and then they come out of this. At times, you will come across some exceptional people where those people will be taking loan. On that loan, one more loan. That loan will give it to private party, take one more loan, do all this juggling activity. A genuine doubt comes whether the value determined is a proper value or not. In my view, 95%, I don't foresee this test at all need to be pressed, but just to ensure whether the value is a proper value or not. As long as the customer and the bank branch, both of them are unrelated parties, there are no challenges when it comes to valuation. At times, exceptionally, there will be challenges to the organization because the transactions are done between distinct person or related person. Otherwise, there is no. Similarly, the next challenge that we have here is after giving a loan, collecting back the money within 4 years. No doubt, I used to get month on month, apart from the principal, a good amount as interest or premium, as the case may be. Maybe that interest will not be paid by the respective person subsequently. A very careful point need to be pressed upon here. If a person closes his loan little early, he is going to be charged separately for a early closure of the loan. What will happen to that amount, early closure charges, and more so what will happen to interest that are collected penal in nature if the interest are collected for not honoring the payment or not paying the interest properly for the loan. For already a person has taken loan, on that there is an interest, on that interest and loan, once again one more interest is levied, additional interest. Why that additional interest? Because on the due date he has not paid the money. So for that reason I have to charge him additionally. And there is a policy behind it, and based on that policy, is it all properly done? It is all compliant. Let me repeat it, all this can be tested quickly, like how I told, when we already go into any case, see all those important advances as part of our working. Just let us make a note of the proposal date approval and the proposal fees, processing charges, or whatever fees that they agree upon. And later let us come and verify in the assessee's respective account when it was charged. And if the gap is less than 45 days, then actually they have complied with the provisions. So this is where a person can satisfy himself in case of ensuring compliances are there as part of the bank branch statutory, followed by inclusions and exclusion. Basically, any incidental expenses, any tax duty cess, any penal charges, penalty, or any other money collected for anything, then all it will be added to the output tax. All will be added to the value of supply. In my view, at a bank branch level, it is very, very rare for all these additions. I don't foresee at all on all these additions that it should be added back or get excluded all the time. Nothing much to deliberate in terms of those aspects. One of a critical area, a very few banks alone appreciate and executes it in a very methodological way. Some of the other banks has opened up certain new risk in connection with not complying cross charge at a particular level. So coming back here, in case of cross charge, Tamil Nadu branch has received a request from in Tamil Nadu in a particular place, one particular bank branch. They received a request from a person located in that area explaining the bank that these people have properties in Bangalore, property in Hyderabad. Those property documents are all given to the bank valuation certificate taken. Everything is done. It is always one of the responsibility of the respective bank branch manager to visit the place wherever they have advanced. To visit the place. Yeah, periodical review they will do. It's routine as part of the funding process, funding modalities, process followed, all this. Maybe in this background, in this backdrop, the only request that was placed was the Tamil Nadu bank branch, respective bank branch officer, calls up another officer in Karnataka, where he is located, or calls up another officer in Telangana state, where the land is located, and asks them to go and verify those buildings and verify the adequacy and just give an internal report. Now all this is done. This is just an example, which means Karnataka branch manager or Telangana state branch manager has provided some sort of services to Tamil Nadu bank manager. Please appreciate it. Do agree, all come under same pan. This is not fair, but cross charge is cross charge. When I need to initiate a $50,000 payment, then that $50,000 payment out and out will be processed by the foreign forex branch in Chennai. But the final approval for the said transaction is done at Bombay. No doubt, the Bombay branch of a particular bank is providing services to Tamil Nadu branch, a particular bank branch. So how cross charge is handled? But for the transactions, one or two I have pressed upon, very rare cross charge getting culminated. But every bank are being advised, banks are prima facie complying with in connection with cross charge. Wherever we see another distinct person providing services to another distinct person, the birth of cross charge will come. And in case of cross charge, the challenge is valuation. Let me repeat, valuation is seriously a challenge. How are we going to ensure the product is valued very rightly and properly is always an aspect that need to be taken. Getting into the prime area of GST. Having discussed about some of the basic compliances, outward supply, reverse charge liabilities, and getting into core of input tax credit. If we carefully note, a bank would report, let's say, a revenue of 4.85 crores. That's all. Of that 4.85 crores, more than 3.25 crores or 3.5 crores will be interest income. On 4.85, 3.5 and above will be interest income. Somewhere between 3.2 to 3.5 interest income. Balance only all the other income which are liable. Now, if we carefully know, there is a exempted supply interest income. There is also a taxable supply, which is all these other income, brokerage, commission, agency, SMS charges, this fees, that fees, maintenance fees, non-maintenance fees, non-minimum balance, check bounce, whatever, all are taxable supply, leviable to GST at 18% flat. Whereas one entry becomes exempted supply, which is basically an interest income. In case of certain specialized branches, we will also come across discount on debentures. Now, coming back here, the bank has two options. Option one, like every other person, arrive your taxable supply divided by your total, arrive your exempted supply divided by your total supply and multiply with common credit to enjoy the credit. And predominantly everything will be a common credit. Here one big debate will go among the banks. There is a precise rule which gives benefit to the bank at the option of the bank. Either the bank can opt, respective bank can opt, paying taxes on a concessional. In other words, whatever ITC they take, on their ITC, 50% they will claim, 50% they will reverse. Whatever be all those expenses, mark blocked credit itself is not available. If it is a blocked item, credit is not available. Don't expect on a block item credit of 50% available. No, not available section. Once it is hit by 17.5, it's hit by 17.5. Once a few expenses like food, beverage, club membership, or goods used for personal purposes, lost, stolen, destroyed. The moment a transaction gets hit over there, then it's hit. That's all. There is no second thought about it. But very interesting to note over here, in case of banks, option is given. Either they can go taxable supply by exempted supply into respective month's common credit, option one, or they can opt a simple flat model of whatever eligible credit I get, 50% I will reverse, balance 50% I will maintain. Predominant of the bank lives only on the method that I have pressed, which is covered as part of section 16 subsection 4. So when it comes to banks are given this advantage of ensuring that they maintain all this. When you go back, as I have earlier explained, 17(2) is one of the option which is exempted by total turnover into ITC. Alternatively, they had a next option. Simply take 50% credit on input service capital goods, balance all to be reversed. On a very close reading, we will know block credit ITC is not eligible. In case of cross charge, 100% credit is eligible. 100% credit means the entire credit is eligible. That would get its strength through the rules. So among these two options, what option the organization opted? Now you can interestingly ask me, why I need to be bothered about all this? See, when we are expressing a view that it is a true and fair view at a branch level as a branch auditor, we are also certifying there is a current asset, and that current asset is coming through a particular process by the company, and one among the line item in the current asset is input tax credit. In other words, balances with government authorities. So coming back here, my intention is when some of us have a reason or some of us question why at all this becomes important. This has to be because that is they claim that it has their ITC. ITC as their asset. Is it a real asset available or not? That need to be verified. That becomes the purpose behind ensuring ITC. And in our considered view, always every bank will opt only option because that is little easy and convenient. See, there is a floating population in a bank that too at a little lower level. Various reasons, not everybody would be experts over there, but all the expenses will get booked only over there. Every expenses would come only over there, and people have to keep on updating everything. In this background, it will be easy, except for these invoices. Rest all invoices you are entitled to claim credit, and it will be available at 50%. So that is how a policy has to be framed or designed in ensuring that those credit or compliances are being taken. Will TDS would be applicable? No, I'm talking of a TDS which would be applicable in case of some of the bank branch being controlled by government. If a bank comes under the definition of PSU, or if a bank comes under the definition of where more than 51% control is with Government of India, then the bank should ensure they are complying with the TDS provisions under the GST law. Instantly, they would be answering, yes, we are deducting TDS. Correct, TDS, income tax TDS is getting deducted. What happens to GST TDS? So that related compliance and that related entry would be part and parcel of this discussion to ensure that TDS on those transactions. Already we have a cap in connection with TDS. Any person who is going to make a taxable supply and that person's taxable supply value exceeds 2.5 lakh, then the respective person will claim that, then the respective person will be paying the TDS, filing a return, ensuring the compliances are done, and naturally the recipient would be entitled for that money in his electronic credit ledger, electronic cash ledger. So points for a discussion is with, first of all, TDS return would be applicable. That need to be verified, and then its compliance, non-compliance may be brought. But prima facie requirement is that compliance is there or not, that compliance is applicable or not, that need to be tested, and then it has to be pressed upon by the bank branch audit. So moving forward towards the last aspect, it's a little tough to verify like every other bank branch, like every other taxable person handling this particular audit. One of the differences is, as earlier I have explained, a GST registration for a bank is stationed at a state at one particular level. Let's say SBI Bank in its Chepak office is considered as the zonal office, and there they have obtained GST registration. Let's also say they have 150 branches in Tamil Nadu. Very simple. All 150 branches will be added into the place of business of that single registration. Very interesting to note over here is, in those circumstances, we are auditing only a branch of all the 145, but return is filed consolidating all 145 revenue. So I have my own thoughts whether a bank branch auditor will have the comfort to get a return filed for at least that state, and comparing with it, it's all close to impossible. Maybe whether the returns are filed within the period, failing which there is an interest liability, or in case of, as we expected, in case there is going to be a excess claim of ITC or a wrong claim of ITC, that reversal and its associated interest may be considered as part of all those provisioning requirements or MOC requirements, as the case may be in case of bank branch. Some of the important takeaways, in other words, these are all the minimal or the minimalistic requirement as part of the bank branch audit to have a, and to ensure all these are all complied with. How the banking registration is being considered, and in that state, how many registrations they have, how they operate it, that basic understanding is required. Whether the bank has taken a ISD registration, input service distributor registration, to distribute its common credit, because at the bank level, there will be a celebrity who will be stepping in, and that celebrity will disseminate the brand's image throughout India, and he will come up with a proposed bill. Now that bill, ITC cannot be enjoyed by only one GST registered person. It has to be distributed through to all the GST registered person. So those requirements, those data, if in case all that are all available, in case of 9 subsection 3, basically the reverse charge related requirement, those related documents followed by are there any notices received from department? Are there any reply that they have responded? Old notices that are pending and those notices status. All this will be of little help to the statutory auditor or lead auditor in connection with ensuring the complete requirements of the branches are being taken care of. Similarly, whether all the records that are required under Section 35 read along with Rule 56 are complied with is a next area that need to be verified more particularly. Inward supply register, outward supply register, all these registers are being maintained properly or not, how it is maintained, all this are to be taken care more precisely. So these are the prominent points in connection with statutory bank branch audit. As this is a very limited discussion, let me share, if being practiced this, maybe we require some 4.5 hours of time to just satisfy ourselves that this branch is complying its GST requirement in the way that it has been highlighted. Only two, because as being a statutory auditor, as I already highlighted during the opening points of the 1 minute.
So finished, sir. Ganesh sir.
Rahman, I'm almost on the closing verge. 1 minute, suddenly something has happened. Okay. Now, as I earlier highlighted, in connection with the points, in case of the bank branches, these are all some of the basic requirement, like any other branches, it should also be considered. There are no special treatment that are available over here, and these aspects need to be considered by the organizations. So that is in terms of the prominent topic that is handed out to me. Any questions that are there? Yes, I would take it up as part of the discussion. Over to you, Rahman sir.
Finished, sir.
Yes. Prabhu sir has raised a question in the
If the HO appointment letter says GST is looked after by HO, what is to be reported by branch auditor?
When the appointment letter is very clear that GST aspects would be considered by the HO, I think the statutory auditor is not burdened with his liability in connection with verifying on the at least at a little more detailed way. Whatever that are being pressed by us here are a little extra requirement than from its regular compliances. So maybe at a very, very regular level, from the objective of its taxability and eligibility of ITC. Maybe at that level, they can stop and they can proceed with their regular audit. They no need to press upon on some of the 6-7 areas that we have highlighted over here as part of this deliberation. That would be, in fact, a little more easier for the respective statutory bank branch auditor to complete his activity at the earliest.
That's it, sir. Thank you very much, Ganesha, for your valuable time and presence, sir. On behalf of SIRC ICAI, I would like to thank you. With that, we have come to the conclusion of today's CPE program. Sir, with your permission, we have already recorded. Shall we host in our YouTube channel for the benefit of our members?
Yes, yes.
Yeah. We will upload this program within 24 hours in our SIRC YouTube channel. Thank you, one and all, for your valuable time. Thank you.
Thank you.